Hello everyone, and welcome back to Trading Club 7. Are you tired of analyzing markets, only to find yourself confused about what's happening? Have you wondered why your trading plan keeps you from getting in the right trades? In today's lesson, we're going to dive deep into one critical aspect of trading that can help you make better decisions by creating rules for trend, range, and news conditions. Understanding market conditions is essential. You see, every market is constantly moving between different states. Sometimes it's in a clear trend, while other times it's stuck in a range, just moving up and down between two support and resistance levels. And when there's a big news event or unexpected economic news comes out, it can shift market conditions in an instant. Having rules helps you determine the current state of the market and decide what position to take. Let's start with trend conditions. Imagine you're driving your car on a straight road and going fast. That's like a strong uptrend or downtrend. If you're in the slow lane, you're moving at a steady pace between speed limits of the traffic jam ahead and behind you. That's a range. Having rules for trend conditions helps you decide whether the market is in an uptrend, downtrend, or just in a range. For example, let's use the euro against the US dollar, also known as a currency pair. A simple trend rule could be a 50-period exponential moving average EMA that's above the 200-period EMA on the daily chart. This might indicate an uptrend. Another approach could be to look at the relative strength index RSI. If it's above 60, the market might be in an overbought state, indicating a potential downtrend. However, beginners often fall into common mistakes. One of the biggest mistakes is failing to create specific, measurable rules to define their market conditions. Without these rules, you'll find yourself relying on emotional decisions, or even no decisions at all. It's crucial to develop and refine your trend, range, and news conditions rules to trade confidently. Take the US Dow Jones Industrial Average, which has a clear uptrend from the pandemic lows to this day. However, during that time, there were also periods of correction or consolidation, where the market seemed to find its way back to key support levels. How could you define this range condition? A rule might be the 50-period EMA below the 200-period EMA, or a relative strength index RSI below 30. If both conditions are met, it could indicate a range condition. News conditions rules a crucial aspect. When a significant news event comes out, it can have a huge impact on market conditions. A simple rule could be checking the news calendar and looking for events that affect the underlying currency or asset. This can help you prepare for market shifts and avoid taking positions in uncertain conditions. For instance, the Federal Reserve rate decision affects US stocks. A rule could be to check the news feed for any updates on the decision, and adjust your strategy accordingly. If the news suggests rate hikes will be more aggressive, you could shift to a more defensive position for the US stock market. Practical exercise. For today's practical exercise, I want you to think about creating a list of rules that will help you define the market conditions you want to trade. Consider the following. Trend conditions: use your favorite indicators, like moving averages, stochastic oscillators, or Bollinger Bands, to determine the state of the market. Range conditions: identify key support and resistance levels for your chosen asset, and look for price movements within or breaking out of these ranges. News conditions: create a watch list for market-moving events like GDP announcements, inflation data, or central bank decisions that might impact the market. Here's an example of what your rules list might look like. For uncertain market conditions due to a significant news event, I will wait until the news impact is clear and check the news feed for updates on the event. For your homework, draw up some basic rules using historical charts and data for your preferred assets. For instance, let's use the Apple stock from 2020 to today. Can you define some trend conditions and range conditions using different indicators like EMA, RSI, and moving averages. Don't worry about perfection. This exercise is meant to help you learn and refine your rules further before implementing them in live trading. When you're finished with that homework, you'll be one step closer to creating trading strategies that work for you, and not the other way around. In our next lesson, we'll cover another key aspect of building a successful trading strategy.